Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take. So you want to make sure you're managing risk in a way that makes sense to you with each trade. And we'll go over some ideas in that regard with some tools that are built into the order window within our web trader an app that make the risk management side of things quite a bit easier with calculating your exposure and your potential profit, etc. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both your MT4 and MT5 accounts from the same location. And the same is true with our app that allows you to trade on both account types, and also all of the extra tools and fundamental analysis and technical analysis help that you find within our platform and app. They're interchangeable in both locations. You have the same types of tools, whether you're using the free signals or the market buzz or the economic calendar. Those are all available in our app and our web trader. Now, if we log in the upper right-hand corner here, we'll find ourselves in the web trader platform. Now, today's focus is technical analysis, but it always makes sense to talk a little bit about the fundamental news, and depending on how big the news is, that can help determine which technical patterns you prefer over others as you do your technical analysis. And so, for example, this evening, we've got really big news coming out of the US. Within a couple hours time now, there'll be a rate decision in the US deciding whether to lower the federal interest rate or keep it the same. I think the consensus is about 50-50. Some believe that maybe they'll lower the interest rate 0.25%. Some believe they'll keep it the same, maybe leaning towards not lowering it this time. And then the question more is, after that, if it comes in that they don't lower the interest rate, what is said in the press conference after that, in the question and answer period? Will Jerome Powell allude to the fact that there will be rate cuts in the future, even if they're not inclined to cut the rate with this event? But we'll see. Perhaps they cut the rate, perhaps they don't. And we're just not sure what Jerome Powell will say in the press conference either. So one thing that you're pretty much assured of during this type of fundamental news event is there certainly will be volatility. The market literally is hanging on every word that Jerome Powell says during the press conference, and many times you get more market volatility and movement on the charts during that time period than you do when the actual rate decision comes out, which the rate decision is first, followed by the press conference about a half hour later. So it'll be interesting, and whatever you're trading on, you want to keep that in mind, that we don't know for sure what the rate decision will be. Likely if they cut the interest rate, then there'll be some surprise with that. And I think in a positive sense with the equities, with the stock market. The lower the interest rate, the better the stock market seems to like it. That could have an effect on the US dollar. If an unexpected rate cut comes this evening, that could weaken the US dollar potentially. And the opposite could happen. If they don't lower the rate, and there's a lot of strong talk about not lowering it in the future unless the data says that he should, that could strengthen the US dollar and maybe spook the markets. So we'll see what happens with that press conference. But when we go into the charts now, probably what we want to look at is if there are ranging patterns right now, very well could break out of those patterns. By ranging pattern, I mean a movement that goes up and down without breaking the high or the low. This actually is a downtrend on this pairing, but let's take a look at some other charts. and start to do some technical analysis. So if I'm pulling up something like the US 500, which is a pretty standard US index to look at, the 500 top companies in the US, so you have a good mix of indices or industries within this index. And so what we're looking at then at this chart is to try and identify what kind of pattern do we have right now. And since the week started back here, okay, coming out of last week, this price level was established, and I could drag this line down just a bit, okay, and get rid of this one, and we've got kind of the peak up here. So last week was here, establishing a support level here and resistance up in this area. The week opens, and it ranged between that high, this resistance, and this support. We ranged between that, where it started to range last week between those two price levels. We opened the week respecting the resistance here from last week's close, respecting the support down here from last week's support level, and ranging between that resistance and that support until now. Okay, and so I think it's probably likely that with the volatility that could come with the rate decision and the press conference out of the US that follows, that we very well could either break this support level or go up and challenge this resistance level this evening and going into tomorrow. So looking at this from a perspective of understanding the fundamental news that's about to come, I can easily look at this and say, all right, if there's not big news, it'll probably keep ranging. But the anticipation is there probably is kind of big news coming because it's a big announcement. And so one way or the other, if you think that this could break through the support or the resistance and get out of this ranging pattern, then you could have a pending order below the support to sell. If it does come down and break the support level, then perhaps they chose not to lower the interest rates, or perhaps in the press conference talked in a way that alluded to not lowering interest rates maybe in the next session. That sort of type of talk could spook the markets. So if indeed this comes down and breaks the support level in the coming hour or two, then perhaps a pending order down here to sell could make sense. And then at the same time, a pending order above this resistance level, if it does, let's say they do lower the interest rate, and if the market responds positively to that, then this could go up and break the highs of this week, and then you could have a pending order up here to buy. Okay, so this is what we call a breakout strategy. Now, interestingly, we could take a look and see, is there a signal on the US 500? And there is. Okay, this is a short-term signal. And why would it be a buy signal? Because from a technical perspective, when we're looking at a technical signal, there's a ranging pattern. We see it, we already outlined it. Resistance here, support here. We're closer to the support level than we are the resistance. So it looks like it wants to bounce off the support. So from a technical perspective, it makes sense, buy right now. Okay, and until the news comes out in a couple hours, it'll probably continue to range between these two prices. So in a short-term perspective, I could see that this signal's a buy signal, that you trust this support level will hold at least for the next couple hours. Now, if there was not the press conference and the rate decision coming up, I might buy on this buy signal right now, because if there wasn't big news to break this ranging pattern, then to think that the ranging pattern would continue would make sense. So minus those large announcements this evening, I like this buy signal because the ranging pattern shows that it's having trouble breaking out of this up and down movement. So it's near the support, so it would make sense to buy. But because of the big news coming soon, I probably would avoid this signal right now. Okay, so this is how you can let the fundamental news help you a little bit with which technical patterns do you trust right now and which ones don't you? Which signals do you trust and which ones don't don't you trust? And so in this case, I think the fundamental news makes me a little bit nervous that it might break out of the ranging pattern in the coming couple hours. And so I don't trust necessarily that it's not going to challenge this support level and break through before it would go up to my take profit up this direction, okay, which is where they've got the take profit zone up here. Okay, so I think what I would be looking at here is a breakout strategy option that you could go with if you think that the rate decision and the press conference that follows could create enough momentum to break out of this ranging pattern. And so how would I set this up? I'll go ahead and say execute when price hits, and really it should say if price hits. There's no guarantee it will hit your entry price. So execute if the price hits, and if we're going to only trade if it gets above this resistance, then I probably want to look up here and say if it gets above last week's resistance level. We have resistance here today, and just a little bit above that was the resistance from last week. So if it breaks above this level, boy, there must have been good news for the market. Okay, if it breaks up free and clear of last week's high right here. So I'm looking and seeing if it breaks out of this ranging pattern enough to break above all of this resistance, then I think it must have been really good news with the press conference and the rate decision for the S&P 500. Okay, and so only if it gets to 57.35 then, or somewhere in that range, then I might be thinking about buying. So execute when price hits, or as I said, if price hits 57.35. Okay. Right about there. Okay. And stop loss then would make sense to put it back below this broken resistance. If it's a true breakthrough with big news, once it breaks through, it should continue climbing for some time and not necessarily pull right back down. If it's a false breakthrough and it comes right back down, then maybe it's not going to continue up. And so it might make sense to have your stop loss back below this resistance level, which should act as support. Once it goes above, it should keep it from dropping back down. But if it does break back down below this level, then maybe around 57 even could be your stop loss. Okay, so execute when price hits 57.35, stop loss 57 even, or if you want to get just below that round number, then we'd be saying 56.95. Okay, and then where would my take profit be? Let's go to the larger candles and see if we find something that makes sense. On the 1-day candles, I think I prefer 4-hour candles. Zoom in a bit. Get rid of some of these lines from the past up here. And I think we're going to have to go back to 1-day candles. We don't get enough data on the smaller candles. And so we start to see, besides a lot of my old lines from past sessions, get rid of some of these. Okay, right here, I see on the 1-day candles that the next resistance level, once we would enter this trade, would be right up about here. It's the top of this 1-day candle that spiked and came back down. Okay, so it looks like this wick at the top of this 1-day candle aligns with these 1-day candles here. You see these 3 wicks where it hit and dropped, hit and dropped, hit and dropped right here. And that aligns with this 1-day candle here. So when then we go back to 4-hour candles, okay, that's this level right here was the 1-day candle resistance level from the past weeks. So 57.71 is the first spot where we might find resistance. So let's say 57.70. All right, so it looks like my risk is about 6,000 and my potential profit is a bit under that if I take profit at that first resistance level to make 5250. Now, if I decide I want to, this must be big news if it breaks through all that resistance, so then maybe I look higher and I say the next resistance level, if it breaks this one, is here. Okay, that's the next spot. If it breaks through these one-day candles, the next spot is here that it reached and then dropped from. So the next resistance level is here, and that's at 58.33 or so. And I think that ratio is going to look a lot nicer. So instead of 58.33, I'll say 58.30, just below that level. And now I'm looking at better than 2-to-1 ratio potential profit to risk. And I'm just hoping that the rate decision and the press conference creates a large momentum to make a big move. Okay, and this is on the upside. We still need to set it up for the downside. All right, so now that I have my entry point price and my exit prices for take profit and stop loss, I can see my potential profit and my potential loss. So now I have my prices picked that I would want to enter and get out on the trade. Now I just need to adjust my trade size to be the level of risk and potential profit that I want. I like the ratio, but now I need to have the overall dollar amount at a proper level for my risk tolerance and for my balance. So if, let's say I'm willing to risk 500 on the trade. So then I need a smaller trade. If I go 0.05, okay? Now I'm risking 200 to make 475, okay? 0.12. Okay, getting close to my 500 mark that I said I wanted to risk per trade, and you would have a number that makes sense for you, for your balance and your risk tolerance, whether that's 0.5% of your balance, 1%, 2%, whatever that might be for you. So I'm shooting for about a 1% number here, around 500, 539. It would be almost exactly 1% of my balance. So if I start adjusting this now, 0.14. Okay, there's 560, so 0.13 is going to be just under 1% of my balance. Okay, 520 to make 1,235, so over 2% profit, risking a little less than 1%. Okay, if I like that risk reward, I already have the technical analysis outlined, and so then I buy. And you understand it didn't actually buy yet because I have it set up as execute when price hits, which is a pending order. So if I look in the orders now, I will see that this will only open if it hits the trigger price of 57.35. Okay, and I know there's big news coming, so perhaps it breaks up through that resistance and hits that price this evening or tomorrow, etc. And hey, maybe there's a announcement of a trade deal between the U.S. and a major economic rival, and that would be something that could unexpectedly break it out of that ranging pattern as well. We've got other fundamental things happening that could help us with our technical setup and breakout strategy. Okay, so now we can go back to the same instrument and we can say, well, what about the opposite? What if I wanted to sell in case it breaks below the support level, right? Didn't we say we're not sure which way it'll go? So if I'm looking at 4-hour candles and we just did the buy scenario, if the rate decision comes in a way that excites the market and the press conference maybe excites the market and the market goes rushing up, we've got that ready. If it hits up here, we'll buy. The opposite can be true as well. Maybe the rate decision shocks the market into fear. Maybe the press conference does that and the market crashes. In that case, then we could be looking to have a pending order to enter the trade if it breaks below this support level here. So if it gets down to, say, 55.90, 55.80, somewhere in this range down here, then that would confirm a downtrend. And we would assume that then the rate decision and the press conference maybe went against the sentiment of the market and push things downward. So just the same way that we set up the buy pending order, we can set up a sell pending order. So we could say execute when price hits. And again, it should really be if price hits. If it comes down and breaks below this area here, okay, then we'd be looking at triggering a potential sell pending order. So just get rid of some of these lines so as not to confuse things. And so if we're below that support level and we hit 55, and I was saying 80 might make sense. If we get down to 55.80, then maybe the market was spooked enough to convince you that this is going to be a downtrend. Okay, so if it hits 55.80, then sell. Stop loss would be back above that. So if it broke through, triggered the sell, and then went right back up above this price level and established an uptrend again, back above this support level, then you'd say, okay, it was a false breakthrough maybe, and you take a small loss. If it breaks with enough momentum that it just keeps dropping, your potential profit could be pretty large. Okay, and you could be looking at the support levels down below to say if this is truly a big momentum move and it breaks this support level with big news about interest rate policy, then maybe this drops down to a level that it was at a while back where we see a support level like down here. Okay, and we could switch again to one-day candles to start to try to find where would we put our take profit if indeed we think there's a big momentum move down. So we'd be looking here, and I see right here a spot where this went down and bounced back up on the one-day candles. So this could be a spot where you're looking that if it did start to plunge, this is the first spot in recent candles where I would find a support level right around 54.67. Okay, so maybe 54.70 could be a take profit. 54.70. And the stop loss again would be back up above this line here. And to look at that, we can go back to our 4-hour candles. If it's dropping below 55.80 to trigger it, and then it comes back up above 56.05, say 56.10 could make sense to say if it went back up to that level, then the downtrend was killed and you take your small loss maybe, okay? Okay, so I've got that set up. And one thing I see is that it's almost a 4-to-1 ratio. And so I like that, but then I start to say, you know what, I don't need it to be such a great ratio, so let me be less greedy on my take profit. And I see a support level here as well. Okay, this was old resistance, and once it went above there, it tried to act as support, except for this one that we were putting our take profit here. So maybe we put our take profit here, and it doesn't have to break back below this old resistance level that then started to act as support. So if it comes down to 5,500 flat, perhaps we're happy to take profit there. So let's see what kind of profit ratio that is. It's more likely to get there than the lower number. And we still have almost 3-to-1 potential profit compared to risk. So maybe I go just above 5,500 flat and say it doesn't have to actually hit exactly 5,500, let's say 5,505, and I still have better than 2-to-1 ratio potential profit to risk. Okay, and I could even cheat this up a little bit to 56.15 to say I'll be even more patient with my stop loss, even 56.20. Okay, now we're getting to about a 2-to-1 ratio. And maybe I'll go back to 56.15, which puts my stop loss up here. So we really have to reverse back up. If it breaks below all these levels, breaks this support level, triggers our sell position down here, it would have to come all the way back up through this old support to establish an uptrend before we would give up on that sell position. Okay, so now we let the technicals determine our entry point and our exit point. for take profit and our exit point for stop loss. So we've got everything set up from a technical perspective for this breakout strategy. If it breaks the support levels on the 4-hour candles that we're looking at, if it breaks below all of this support, it triggers the sell. We got take profit before it would have to break this support level down here, and we've got our stop loss back above all of this level here. It would have to not only break through and establish the downtrend, but then establish an uptrend again to hit our stop loss. Okay, so everything makes sense from a technical strategy perspective, and our ratio is nice, about 2 to 1. Now we just need to adjust the trade size to be the amount of risk, again, that makes sense for your risk tolerance. And so I'm looking for around 530, something like that, to be around 1% of my balance for the risk side. And that's about it. 0.15, it's similar to the buy pending order as well, just slightly different on the distances with stop loss and take profit. So the trade size, instead of, I think the other one was 0.12, this one's 0.15, risking just under 1% to try and make a couple of percent on the move. Okay, and so if we're right, I don't know, 35, 40%, 45% of the time, we could be breaking even on these types of trades if we have better than 2 to 1 ratio potential profit to risk. And if you can be right just a little better than 50% of the time, boy, you're really doing something nice. But 50-50 brings you profit. If you're losing half of what you're making, you can lose one and win one, and you're in nice profit still. And so, 1 out of 3, you're breaking even if it's 2 to 1. Really, 33% you could be profiting with a 2 to 1 potential profit to risk ratio. So with this type of setup, we're hoping for anywhere near 50% accuracy, and we have a really nice profit with that type of setup with the trades like we did here. Okay, so we've got the pending order to sell, and we set that in motion then as an order, not a market move. So what we see over here then are 2 pending orders, 1 buy, 1 sell. We are guaranteed that one of these will open. How do I know that? Because eventually it's going to break out of that ranging pattern. Even if it's not tonight, it might be tomorrow, it might be the next day, but it will break out of that ranging pattern and one of these trades will open. What we're hoping, obviously, is that when one of these trades opens, it'll be with a large amount of momentum so that it breaks the support or the resistance, triggering one of the pending orders, and then runs and keeps moving for a bit. Okay, so we'll see how this goes through the big news that's coming up in less than 2 hours. I anticipate one of these would be triggered before the end of the trading day today. We'll see. No guarantee of that, but I feel pretty strong that one of them at the very least would be triggered. And if the first one triggers and loses and it triggers the second one, we only need, like I said, we only need one of them to win, and we'll be an overall profit. All right, everybody, I think this is a good place to stop. We could go through this type of breakout strategy example really with any instrument. Okay, we can look at the signal for gold. We can look at the signal for Euro USD, for crude oil, and we could then look and see, is it ranging? And if it's ranging like that right before a big announcement that we think might affect the movement of that instrument, then you can set up with the concept of a breakout strategy. If you think the fundamental news will help drive a technical breakout from a ranging pattern like we saw here on the US 500. The reason I chose the US 500 is I believe the stocks and the companies within the US 500 will have a large and strong reaction to the rate decision in the press conference, maybe more so than some of the other instruments, such as crude oil or something like that. Not that they won't also have a reaction, because I think they certainly will. But I think the equities really react strong when the FOMC committee and Jerome Powell are going through their monetary policy, and especially with a rate decision. So we'll see how it goes. We also could be looking at the NASDAQ, some other major indices. It is pretty much a global marketplace. So you'll likely see the DAX and the The UK 100 and other major indices move quite a bit as this rate decision comes in as well. All right, everybody, thank you for joining, and you can always view the webinar as well on our YouTube channel. We record each session and upload them usually by the next business day, by the next business morning. All right, thanks everybody. Good luck with your trading. Bye for now.